Assalamualaikum and a very good day to Sir Basaruddin Shah Basri, and we are from JIBA2I Group 4. And today, our group will be presenting about zakat and taxation in Malaysia, focusing on the comparison between corporate entities and sole proprietors. For introductions, in Malaysia, both zakat and taxation play an important role in ensuring fairness and supporting national growth. Zakat is a duty for Muslims to purity wealth and help the poor, while taxation is a legal duty under the government to fund a development and public service. Even though they come from the different foundations, both systems share the same goal, which is for distributing wealth for the goods of the society. And what's make Malaysia unique is that zakat payment can also reduce tax, showing how religions and state responsibilities work together. In these presentations, our group will explain how zakat and tax apply differently to companies and sole proprietors, and why understanding this difference is important to compliance and for building a fair economy. For the case background, this case study looked at two types of business in Malaysia, which is corporate company and sole proprietors. Both play an important role in economy, but face a different responsibilities. For a company, it's treated as a legal entity. It can be own a property, enter a contract, and shareholder only receive profit as their dividends. Company are liable to pay corporate income tax, and if they are Muslim-owned, they must also pay zakat, business assets. One advantage here is zakat also sometimes can be used as a tax rebate. On the other hand, sole proprietorship is run by individual and there is no legal separation between business and owner. This means the owner has unlimited liability and must personally pay both income tax and zakat. This challenge here is that business and personal finance are often mixed and make management more difficult. So, the key difference is that corporations usually have a structured system and possible rebates, while the sole proprietorship have faced direct and personal responsibilities.
My name is BALQIS binti Muhammad and I will explain the key issue faced in fulfilling zakat and tax obligation for both corporate and sole proprietor. The first issue is awareness. Corporate usually understand tax better because tax is strictly enforced by law. But when it comes to zakat, rules are different in every state, so company got confused. For sole proprietors, the problem is bigger. Many don't know if they should pay zakat on their business profit or personal income. Some even think paying tax is already enough, which is not correct. The second issue is compliance. Company focus on paying tax because if they don't, they can be fined or audited. Zakat is not enforced the same way, so sometimes they treat it as optional. For sole proprietor, compliance is even harder because many run informal business without proper record. They also mix personal and business money, making it difficult to calculate correctly. The third issue is administration. Corporate must report to two other authorities, which is LHDN for tax and the Majlis Agama Islam Negeri for zakat. This is double work and cost more. For sole proprietor, the issue is different. Most of them don't keep proper bookkeeping or financial statement, so it's hard to calculate zakat and tax. Some just ignore the process completely. Lastly, the double burden. For corporate, zakat can reduce tax through rebate, but only partly. They still feel like they are paying both, which pressure cash flow. For sole proprietor, the burden is heavier because of limited cash flow. They usually prioritize tax to avoid legal action, and zakat gets left behind. This creates both financial and religious challenge.
Assalamualaikum. For my part, I will be presenting on the institutional role of LHDM for two different groups of taxpayers, corporation and sole proprietors. Although both groups can claim zakat as a rebate, the way LHDM manage them is quite different. Let's start with corporations. Their income is taxed separately, and companies are required to file their tax returns using Form C. When companies pay zakat, they are allowed to claim it as a rebate against their corporate tax liability. However, this claim is not automatic. LHDM plays the crucial role of verifying zakat contributions by cross-checking receipts with state zakat authorities. This protects the system from abuse and ensures only genuine zakat payments are accepted. At the same time, corporations must comply with strict tax regulations, including transfer pricing, real property gains tax, and withholding tax. Here, LHDM applies strong enforcement through audits and monitoring. But it also provides clear guidelines to make sure companies understand how zakat rebates can be properly set off against taxes without causing revenue leakage or double counting. In short, for corporation, LHDM balance between strict enforcement and facilitation. Now, if we look at sole proprietors, their situation is quite different. Business income for sole proprietors is not taxed separately, but instead treated as a personal income under the Income Tax Act 1967. They file their returns through Form B, where both business and personal income are combined. Just like corporations, sole proprietors can also claim zakat as a rebate against their tax. However, the challenge here is that many small business owners do not have structured accounting system, and they often mix businesses and personal funds. This makes it harder for LHDN to monitor and verify zakat claims accurately. To address this, LHDN takes a more supportive approach. Instead of relying heavily on audits, LHDN issues simplified guidelines, conducts seminars, and carries out outreach programs. The aim is to educate small business owners so they can report zakat correctly and avoid double taxation. Another important point is the way LHDN collaborates with state Islamic religious councils, since these councils are the official bodies responsible for zakat collection. LHDN works with them to verify payments for both corporations and sole proprietors. In addition, LHDN has also introduced digital solutions such as e-filing, which makes it easier for taxpayers to declare income and zakat in one place. For corporations, this system enhances efficiency and support audit trails. For sole proprietors, it reduces administrative burdens and provides a straightforward way to reconcile both tax and zakat. So in conclusion, LHDN applies two different approaches depending on the taxpayer group. Corporation face a stricter compliance framework with close monitoring, audits and verification processes. On the other hand, sole proprietors receive more education, guidance and simplified procedures to encourage accurate reporting. Despite these differences, the goal is the same. It is to protect government revenue while allowing Muslims to fulfill their zakat obligations without experiencing double burdens. Through this dual approach, LHDN ensures that Malaysia's tax system and Islamic fiscal duties operate in harmony.
I will now present on the institutional role of zakat, comparing corporate entities and sole proprietorships. As we know, zakat is one of the 5 pillars of Islam. It serves to purify wealth and ensure redistribution from those who have more to those in need. In the context of business, zakat applies to both companies and individual business owners, and it plays an important role in balancing economic growth with social justice. For corporate zakat, it is paid by companies on behalf of their Muslim shareholders based on Sharia compliant business activities and assets. It becomes compulsory when the two main conditions are met: the nisab, which is the minimum wealth threshold determined by zakat authorities each year, and the haul, which is the completion of one Hijri year. Companies are required to pay their zakat through the state zakat collection centers, and if they operate in multiple states, they can either pay in the state where their headquarters are located or distribute zakat payments to other states where they have business activities. There are also several benefits for corporations that fulfill their zakat obligations. First, zakat payments are tax deductible up to 2.5% of aggregate income, which reduces taxable income and encourages compliance. Second, some zakat authorities allow what is known as zakat wakalah, where companies are permitted to distribute part of their zakat directly to the asnaf or eligible recipients. This gives companies the flexibility to align zakat distribution with their corporate social responsibility initiatives. Another advantage is that shareholders are exempt from paying zakat again on the dividends they receive, since the company has already paid on their behalf. This prevents duplication of obligation and ensures fairness. Moving to sole proprietorship zakat, the approach is quite different. In sole proprietorship, the owner and the business are considered one and the same, which means the individual carries full responsibility for paying zakat. Zakat is imposed when business profits exceed the nisab and the haul is complete. When calculating, required business expenses are deducted from income, and the remaining amount is combined with the owner's other zakatable assets such as savings, gold, or agricultural produce. However, many sole proprietors face challenges. For example, some lack proper financial records, while others may confuse income zakat with business zakat. This can make it difficult to calculate the correct amount. To address this, zakat institutions provide a variety of support such as mobile apps, online zakat calculators, advisory counters, awareness campaign, and easy payment channel through online banking or zakat collection counters. These efforts are especially important because many sole proprietors run small or medium-sized businesses and may not have the some resources as large companies. In terms of impact, the contribution from sole proprietors is generally smaller compared to corporations, but when combined, it becomes significant. Thousands of small business owners paying zakat collectively create a strong source of funds that can be distributed to the asnaf, helping to reduce poverty and improve social welfare at the community level. To conclude, we can see that zakat institutions play a vital role in regulating zakat for both corporations and sole proprietors. Corporates benefit from structured system, tax incentives, wakalah arrangements, and large-scale impact, while sole proprietors rely more on personal accountability and grassroots contributions. Together, both systems demonstrate how zakat not only fulfills religious obligations but also strengthens social justice and socio-economic welfare across society.
Now, I will be presenting about the impact of zakat and taxation on society, focusing on both corporate and sole proprietor. Together, they complement each other. Zakat provides immediate relief for the poor, while taxation ensures long-term development for the nation. Let's begin with corporate zakat. There is large company that contribute significant zakat through institutions such as Lembaga Zakat Selangor. These funds support education, healthcare, and business assistance for the poor. For example, Lembaga Zakat Selangor provides scholarship for underprivileged students, giving them access to higher education. For the clearer view, when companies like Bank Islam Malaysia actively pay zakat, they are seen as more socially responsible, which strengthens trust between businesses and the community. Next, we have sole proprietor zakat. Although the amount is smaller compared to corporation, the impact is often more personal and direct. A small business owner, for instance, may use zakat to help a neighbor buy school uniform or food supplies. During Ramadan and Hari Raya, many sole proprietors also distribute zakat fitrah directly to poor families. This form of zakat builds solidarity, compassion, and stronger community ties, even if it's not as large in value. Now, let's move to taxation, starting with corporation. Taxes from big companies contribute heavily to national revenue. These funds are used for infrastructure, healthcare, and education, which benefits everyone. The example include the North-South Expressway, funded by tax revenue, connect cities and support trade. Corporate taxes also help build hospitals like Hospital Putrajaya and Hospital Sungai Buloh, serving thousands of Malaysians. So, corporate taxation improve quality of life and strengthen the country's economy. For sole proprietor, their taxes may be smaller but still play a crucial role. Local councils such as Majlis Bandaraya Shah Alam or Majlis Bandaraya Johor Bahru rely on these revenues to maintain rubbish collection, street lighting, and community clinics. By paying taxes, small businesses owners also become part of the formal economy, gaining access to government grants, support schemes, and legal protection. This creates for competition and contribute to local development. A great example of the importance of taxation is during the COVID-19 pandemic. The government introduced the Prihatin Stimulus Package and the Pemerkasa Program, funded largely through the tax revenues. This provided cash assistance, wage subsidies, and soft loan to both corporation and sole proprietor. This shows how taxes are crucial for supporting society during crisis.
In order to solve these issues, first, we need to standardize zakat rules across Malaysia. Currently, each state applies different regulations, which confuses corporations and business owners. A standardized framework led by Jakim and Jauhar could set consistent rules, clear calculation methods, and user-friendly tools like online calculators. This will reduce confusion, strengthen trust, and improve zakat collection nationwide. Second, we must strengthen awareness and education programs. Many small business owners still think paying income tax fulfills their religious obligation. Zakat authorities should launch targeted campaigns by collaborating with accounting bodies and use digital platforms to educate businesses. Integrating zakat literacy into schools and universities would also build long-term awareness among future entrepreneurs. Third, it is important to enhance administrative efficiency and integrate tax with zakat. Currently, businesses prepare separate reports for LHDN and state zakat bodies, which leads to duplication and higher costs. By creating a centralized reporting platform supported by digital tools like cloud accounting and AI verification, compliance can be made faster, cheaper, and more reliable. For sole proprietors, mobile apps could simplify reporting and reduce the burden.
Finally, we must address the double burden of tax and zakat. Businesses often prioritize taxes, leaving zakat unpaid. To solve this, zakat should be fully deductible from taxable income, not just a rebate. Incentives such as lower audit risk, faster tax refunds, or certification can encourage timely zakat payments. For sole proprietors, linking microfinancing or grants to zakat compliance can turn it into an opportunity for growth. Clear communication about how zakat funds reduce poverty and support education will also build stronger trust. As a conclusion, zakat and taxation are not conflicting, but complementary in Malaysia. Tax supports national development, while zakat fulfills religious duty and redistributes wealth. Corporations contribute through structured systems, while sole proprietors face more challenges but make local impacts. To strengthen compliance, we must standardize rules, raise awareness, improve administration, and align tax with zakat. Together, these measures can build fairness, inclusivity, and socio-economic resilience for the future of Malaysia.